Hello, my name is Solomon Dworsky. I'm a senior in the Applied Investment Management program covering domestic industrials, and today I'll be pitching Builders FirstSource. Builders FirstSource is a vertically integrated building material supplier company providing to a variety of end markets including remodeling, multifamily, subcontractors, and new single home construction. The company provides their consumers building materials, pre-assembled components, and construction services. The company generates revenue through 6 main segments, as seen in the graphic below. Builders FirstSource was founded in 1998 and headquartered in Dallas, Texas. Before moving on to the recommendation, I'd like to make a change to the data box. As of August 27, 2020, Builders FirstSource announced the acquisition offering of BMC stock holdings, a major competitor within the industry, which materially changed my valuation, which I'll address later in the pitch. Moving on to the recommendation. Builders FirstSource is an industry-leading building material supplier, leveraging their 20 years of experience within the building product sector, gaining exposure to 77 of the 100 U.S. metropolitan statistical areas, representing 400 locations in 40 states. The company serves a variety of end markets, as seen in the previous slide, where the firm holds 86% of single-family housing permits. The building product sector has highly cyclical revenues that are dependent on the housing market. Despite these cyclicalities, Builders FirstSource holds a diverse customer base with 85% of revenues obtained from smaller customers, with only 15% of revenues generated from the top 10 customers, where no single customer holds 5% of sales. The August 2020 Wells Fargo U.S. economic forecast projected residential investment to increase by 5% in 2021, following the swift housing recovery during the lows of March 2020. These growth opportunities will be supplemented by shifting residential sentiment and the Federal Reserve's decision to lower interest rates. In addition to the firm's organic growth opportunities, Builders FirstSource has conducted several lucrative M&As, including the transaction of ProBuild Holdings in 2016, which expanded the firm's product offerings and national exposure. Following the transaction, sales grew at a 3-year CAGR of 5%, and the EBITDA margin expanded from 4.86% in 2015 to 6.76% in 2020. Management intends on continuing M&A activity with their recent issuance of a $550 million senior note issued in March of 2021 and their stock offering for BMC Holdings. Builders FirstSource is pursuing additional margin expansion via their cost reduction initiatives by investing in updated ERP, logistics, and employee metric systems, resulting in a record EBITDA during Q2 of 2020. With this, Builders FirstSource is recommended to be added to the AIM Small Cap Fund at the price target of $35, representing a 16.58% upside. Moving on to the first driver, macroeconomic trends. COVID-19 caused a sharp decline in new single-family housing permits, with a low of 612,000 during March and quickly rebounded in July to 901,000 new permits, according to the St. Louis Federal Reserve data. Pew Research Center stated that 22% of adults have relocated following the emergence of COVID-19. Additionally, a U.S. News article stated that 40% of U.S. adults living in urban areas indicated they would consider moving towards rural areas. The low interest rate environment supplements the change in residential sentiment by stimulating economic activity, as seen with the analysis of the federal funds rate to new home sales from 1990 to 2020, and found a 34% correlation. These factors, including changing residential sentiment and low interest rates, provide opportunities for organic top-line growth revenues estimated to increase by 4.8% in 2020. On to the second driver, M&A success. Builders FirstSource completed a merger with ProBuild during 2016, vastly expanding the company's outreach and capabilities, resulting in incremental top and bottom line growth. The firm recently utilized a $550 million note, increasing liquidity on the balance sheet and providing management the ability to conduct future acquisitions. Builders FirstSource operates within a dense market where inorganic growth through market consolidation will be beneficial to the firm. As of today, August 27, 2020, the firm announced an offering to acquire BMC stock holdings for $2.5 billion in stock with a 1 to 1.3 stock ratio. Management recently stated pro forma sales for 2020 are anticipated to increase to $11.8 billion and expand the company's exposure across major SMAs, as seen in the graphic. On to the last driver, business model strength. Management stated in their Q2 earnings call the company has brought back all of their furloughed employees related to COVID-19. Additionally, management has continued their focus on deleveraging the firm to a 2.8 times debt to EBITDA ratio, while investing in cost reduction programs. Management cited their operational achievements following the cost reduction investment, resulting in the ability to leverage new distribution, logistics, and ERP tools, which cover 15 of their major markets and 70% of sales, resulting in optimized distribution networks, increased speed, uptime, and reliability. These initiatives have resulted in EBIT margins growing at a 3-year CAGR of 18%. Moving on to the valuation. As stated in the recommendation section, the recent announcement of the acquisition offering of BNC stock holdings has created the following changes to my DCF valuation. 2020 pro forma sales of $11.8 billion according to management. Increase in the cost of goods sold and selling general and administration expenses percentages back to 2016 following their acquisition of ProBuild. Lastly, outstanding shares increasing from 116 to 203 million according to the 1 to 1.3 stock offering ratio. The DCF used a 2% terminal growth rate, a 7.9% WACC, resulting in a valuation of $37.17. An EV to EBITDA multiple was calculated using 12-month trailing 2020 figures and a blended average of the peer group, resulting in an 8.7 times multiple. An EV to EBITDA valuation of $26.76 was reached. A price to earnings multiple, excluding Beacon Roofing Supply, who had negative earnings, resulted in a multiple of 16.83 times. A price to earnings valuation of $34.43 was reached. The valuation methods were weighed 45%, 10%, and 45% respectively, reaching a price target of $35, representing a 16.58% upside. Moving forward to the risk section, supply chain risk. Builders FirstSource operates within a highly competitive industry and faces pricing pressure from both sales and suppliers. Changes due to these pressures are subject to declining top and bottom line revenues, adversely impacting the firm's valuation. The commodity price chart to the right demonstrates these commodity inflations, and especially the blue line representing the lumber, which has seen exponential increases in price. Second, cyclical market conditions. The firm's sales have a high correlation to permits of new single home construction and are subject to cyclical demand of the housing market. Fluctuations in demand can adversely impact top and bottom line growth. Moving forward to the management section. Chad Crowe is the president, CEO, and director of Builders FirstSource, who has been with the firm for 21 years, receiving an undergraduate degree from Texas Tech. Mr. Crowe has announced his retirement from the board effective at the end of the year and will stay with the firm in assisting the transition of the new CEO. Peter M. Jackson has been the CFO for 4 years, receiving a CPA, an MBA from Rensselaer Polytech Institute, and an undergraduate degree from Bryant University. Lastly, the two COOs, Scott L. Robbins and David E. Bush, are new to the firm with a cumulative 5 years of experience, receiving undergraduate degrees from Weber State University and the University of North Carolina, Charlotte, respectively. Following my analysis of Builders FirstSource, I found the company has maintained a strong position within their industry through strategic M&A, balance sheet management, and cost reduction initiatives. Recent economic forecasts, changing residential sentiment, and lowered interest rates provide the firm additional organic top-line growth opportunities. The recent announcement of the acquisition of BMC stock holdings supplements additional inorganic growth, providing the firm future opportunities to increase their market share. With this, I recommend Builders FirstSource to be added to the AIM Small Cap Fund with a price target of $35, representing a 16.58% upside. Thank you very much for listening. I look forward to hearing your questions.